Today, folks, if I have to hear one more person tell me why stocks are overvalued, why the bubble might burst, why you should be afraid in stacking cash, my brain is going to have a mental breakdown because you have been in the market long enough to bloody well know what is good for you. And what is good for you is good for every billionaire that's ever been made, has been good for me and has made me extremely wealthy. And that is the tried and true advice, is that you're going to buy stocks tomorrow, you're going to buy them the next day, you're going to buy them probably the month after that and the month after that, and likely continuing that process throughout your entire life. And if it's not stocks, it's real estate, or bloody well better be starting businesses, or you're never going to get ahead in this life. So anybody that is going to rot your brain or put you somewhere that's going to hold you back, I'm going to fix that today, folks. So we're going to start by zooming out. We're going to go over some statistics, some facts and numbers here real quick, and then I'm going to explain to you what I think is happening in the broader market. No, I'm not a financial advisor. I'm some kid that lives in his parents' basement. So why are you watching this? I don't know. But nonetheless here, folks, how much do you think the entire stock market is worth? It's a question I bet you've never asked yourself before. Taking a look, as of 2020, the estimated total value of the U.S. equity market, this is the combination of the New York Stock Exchange, the NASDAQ, your penny stocks, your OTC markets, has been roughly $50,808, guys. If we step back even 2 years into 2018 on this data, guys, we were only sitting at $30 trillion. The markets have expanded by over 60%. $20 trillion have been added to the total market capitalizations of the entire stock market in literally 2 years. I don't know how unfathomably that is to try and explain. And actually, the only way I can explain this by rolling back in time a little farther, guys. Go all the way back to the midst of 2008 when the markets dropped in half, which we can see from 2007, they went from a $20 trillion valuation all the way down to 11. Literally within a given year, guys, our entire market capitalization in 2 years is already double the total valuation of what the markets were in 2008. Understanding of the scope of the insanity of what we are currently witnessing, guys, look at 1998 when the stock market's total valuation was 13 trillion, guys, all the way to 2008, and the market was actually worth less. Yet in 2 years, we have already over doubled that of the entire market's valuation over a decade. Why am I telling you all this, guys? Well, it relates to a point and a reason and a theory that I have on why you should just technically be buying all the stocks you physically can, especially innovation stocks, but we'll get to that in a quick. Let me just share with you a little bit more data, guys. Take a look at margin. This is something I hear a lot about: market crashes, bubbles, etc. Is the margin debt. Oh my God, the margin debt. Taking a look at the total estimated margin debt as of 2021 here, guys, it's sitting at around $778 billion, which sounds pretty astronomical considering we are way up from the $668 billion back in 2019. But when you compare it to the entire market valuation of $50 billion, and considering how much we've increased even in 1 year alone, guys, not even $778 billion is a drop in the pond if we're being real here, right? Taking a look at the volatility index, something else people attribute largely to the market crashes when one might be coming. But we can see that since the market crash in March of 2020, volatility has been coming to a median, actually, which is pretty impressive considering the GameStop news and Tesla and all the other crazy Bitcoin stuff going on in the market. But heck, okay, volatility is calming down a little bit here, right, folks? What about SPACs? Let's talk about the real risky part of the market, something I hear about a lot. We can see SPAC valuations and IPOs have shot through the friggin' moon. I also have an explanation for this, guys, because I mean they've over 500x in valuations just from 2019, so which is kind of crazy to think about here. I mean, look at Bitcoin. Bitcoin can be thrown in the speculative basket here, and look at the valuation and the growth against the Dow Jones, oil, gold. Speaking of these crazy charts and valuations, what about PE ratios? I mean, that's what people like to look at in the investing community. And they'll look at the S&P 500. The broader PE ratio is almost at 40. Holy crap, we haven't experienced that since basically the 2008 financial crisis, guys, or heck, even the dot-com bubble. So that must mean we're in a bubble, right? I mean, it looks clear as day on this chart. I'm going to try and explain to you something right now that's going to summarize why I think Bitcoin, why IPOs are blowing up, and why I think you should continue to buy stocks month over month, day over day, week over week, pretty much for the rest of your life. And it's because of the time period that you were currently born in. And nobody is talking about this except for one person right now. Well, kind of two people, but one person that I can clearly reference, which obviously would be Cathie would. We are living in a generation of basically compounding effects of innovation to a level that's literally crazy, guys. I mean, let's expand our scope here to the last 1,000 years, right? Back in 1400 was when the first printing press was invented here, folks. And it would take, what, another 400 years before the light bulb, the telegraph, the telephone, and heck, even the car. And then by 1960, guys, we'd be pretty much going to the moon here, folks. But basically, even from the time I have been born to where we sit now, and I jam this down people's throats like there's no friggin' tomorrow, is that when you look at every sector of the market right now, there is a rate of innovation that is going on in no likes of any period in history as far as anyone's been able to tell. I mean, we are talking about the genomic race and curing cancers, major diseases, guys, EV, self-driving, everything is going to have a chip and everything is going to be integrated with AI. I mean, heck, go just look at the innovation in AI in and of itself, guys. We're going back to the moon in 2 years. We're going to be on Mars in under a decade. We have global information at the touch of a button, which was something that never existed. Guys, we are living in the information era, and this is so overlooked because this is something that's only been happening since the 1990s when computers and internet and information became broadly more available to the public. I mean, unless your daddy was some real rich guy back in the 1950s and he had connections to Warren Buffett, you wouldn't have even heard the name Warren Buffett, let alone how he bought or what stocks really were in that time period, guys. Like, now everybody and their grandmother has that instant access. We're seeing this growth in the stock market, obviously, thanks to the easy access because of Robinhood, information, YouTube, people being able to buy into GameStop being like 18. There's 13-year-old investors now. I didn't start investing until I was 23, and from what I hear, that is extremely young against what it used to be. But every single market is getting touched with this crazy compound effect of innovation to a level that is going to be exponential from here. I think to not recognize this and not understand the full scope of this and to sit on the sidelines in the market when you fully know that in the next decade things are going to advance faster, and the decade after that it's just going to continue to compound. So if you have, you know, a 15 or 20 year time horizon from now, which means even if you're 50 years old and you can make it to 70, or you're 40 looking to make it to 60, I mean, you're going to watch something unfold in front of your eyes that to sit on the sidelines comes back to a point that I've heard many billionaire investors say, guys, which more money has been lost with people trying to time the market than if you were to just buy and, you know, ride through the volatility. Heck, if the markets drop, what are you going to do? You're going to buy more stocks. What happens if the markets go up? You're going to buy more stocks. So why not just keep buying more stocks if you believe this is a fundamental truth to the reality of which you currently live, which really means there's only two kinds of companies, guys. There's innovative companies and there's stagnant companies. What companies do you want to be a part of? Do you want to be a part of innovation, guys? Well, where is the innovation? Well, heck, guys, it's in the IPO world. It's in the big tech giants. I mean, heck, just take a look at the S&P 500. Do you remember when the S&P 500, the top 10 companies were made up of things like General Electric, Ford or GM? Take a look at the entire top 10 S&P right now. Apple, Microsoft, Amazon, Facebook, Tesla, Google. I mean, I don't even know how, the only reason Berkshire's in there is because Berkshire owns 50% of Apple. I mean, Johnson & Johnson and JP Morgan are barely holding on because the companies that are dominating the world right now are the innovators, the companies that are experiencing this compound effect of innovation. So this is the side of history you're going to want to be on. And I don't care about the short-term prospects. I can't tell you what the stock market is going to do. I'm not a gambler. So guys, I don't know why everybody is trying to be a fortune teller right now when every true investor understands the value of dollar cost averaging. I mean, we all know this. This isn't new news to us. Buffett spouts this all the time. Buy stocks today, buy stocks next week, buy stocks a month from now, and keep doing that until eventually you're going to be rich. You could do the same with real estate or business. And this is the conclusion that pisses me off so much when I watch people go back into this bubble territory talk. And I mean, I could do it for clicks. I'm doing this for clicks. I'd appreciate it. Hit the like button if you enjoy this kind of content, folks. It would really help the channel out. But in light of this, I got to pass the question off to you. Hopefully this offered some clarity into the markets for you guys. It gives you a different lens to look through instead of looking at charts and numbers and PE ratios, because you look at the S&P 500, you'd say it's overvalued. But when you look at the compounding rate of innovation and growth, and you go look at something like Facebook or Apple's earnings, does it make sense that they have a higher valuation? Kind of does, doesn't it, when their revenue's growing at 30 to 50%. So who cares if they're going down? You know they're decently valued against their growth. You know innovation is going to continue. So buy them, folks.